Hello students, in this video I will be addressing one of the confusing points which a lot of students face in terms of lease modification, right. Now here I will be explaining you how to approach a lease modification question in the examination, and I will actually solve those questions for you so that you have 100% clarity with respect to lease modification. Now whenever there is a lease modification, two things are possible. One, the term might have changed, the term might have been modified. Another one, we have either increased or reduced the right of use asset itself. So for example, term 5 years can become 6 years, 6 years can become 4 years. Right of use asset, earlier we had agreed for 1000 SFT, now we may have changed it to 1500 SFT or 700 SFT. So these are the kind of modifications we are looking at. Whenever you get a modification question in the examination, you have to first ask, is there a reduction? Is there a reduction? Okay, reduction can be in terms of right of use asset, reduction can be in terms of your term. Okay. Now if there is a reduction and if the answer to this question is yes, there is a reduction, then what you will do? First you will reduce both ROU and lease liability proportionately. Sir, how to do this proportionately? I will cover that in a question. And whatever is the difference goes to P&L. Okay. After that, what you will do? You will recompute or remeasure the lease liability. You will remeasure the lease liability, and this you will adjust with right of use asset, no P&L impact. No P&L impact. Now when we say remeasurement here, you will take the new rate. Okay. Now if you say, sir, no, there is no reduction, means what? Either there is an increase or there is a change in terms of consideration without change in term or right of use asset. So if there is no reduction, then is there an increase in ROU? Increase means earlier we had taken for 1000 SFT, now we are taking for 1500 SFT. If there is an increase and your price versus increase, these are commensurate, then in that case you will treat this as a new lease. New lease means existing lease accounting you will continue as it is, and new lease accounting you will do by computing the lease liability and right of use asset afresh. Okay. That is in case of increase in right of use asset. Now there is no reduction, there is no increase in right of use asset. Then what is the possibility? There is a possibility that there is an increase in term. The term has increased or the consideration has changed. Consideration has changed. Okay. Or any other modification has happened. So what we have discussed, if there is a reduction either in term or right of use asset, you will follow this accounting. If there is no reduction but there is an increase in right of use asset and the prices and increase are commensurate, it is treated as new leases. In all other cases, here what you will do? You will do a remeasurement and you will adjust the right of use asset, no P&L impact will be given. This is the summary of lease modification accounting that you need to remember for the examination. Now what we will do? We will take up questions and we will solve them. Okay. First, increase in term. Lessee enters into a 10-year lease for 5,000 square meters of office space. The annual lease payments are rupees 1 lakh payable at the end of each year. So what is the lease term? 10-year lease, 5,000 square meters, and the lease payments are 1 lakh payable at end. Interest rate is not known and the incremental borrowing cost is 6%. Now whenever you get a commencement question, first thing that you need to do is you need to compute what was the lease liability as at commencement. Okay. Now here we can do it in two ways. One we can do by calculating the present value factor for each year. Second one, what we can do, we can calculate using the present value annuity factor. Okay. So lease liability on date of commencement. Okay. How much is that? That is present value of rupees 1 lakh discounted at 6% for 10 years. In the study material, you will see they have calculated year by year, but you can use present value factors in the examination. How to compute present value factors? 1 divided by, in this case 1.06, you will do it 10 times and grand total. Okay. So, present value of rupees 1 lakh discounted at 6% for 10 years. First, we need to see what is the present value annuity factor. And one more thing, if the question gives us this present value factor in the examination, we will consider that present value. So, now here what is the present value factor? If you have this calculator, what you can do? You can take 1 divided by 1.06 is equal to 1 time 2, 3, 4, 5, 6, 7, 8, 9, 10 and do a grand total, you get 7.360. Okay. So, present value annuity factor of 6% for 10 years is equal to 7.360. And in the exam, if they have given you present value factors, you can total it. You may get 7.359 as well. Okay. And accordingly, you can solve it. Now, what is the present value? Present value of lease payments. Present value of lease payments is equal to 1 lakh into 7.360, that is 7,36,000, and this is your right of use asset or lease liability, both are same, that is equal to 7,36,000. Okay, this is the first thing you have to compute. After that, what we need to know is on the date of modification. Now, what has happened in the modification? At the beginning of year 7, means 6 years have passed by, lessee and lessor agree to amend the original lease by extending the contractual lease term by 4 years. Now, they are extending it by 4 years. There is an increase in term. There is no reduction. There is an increase in term. Okay. The annual lease payments are unchanged. So, lease payments are unchanged. They are just increasing the lease term. Now, whenever there is an increase, which category does it fall into? Is there a reduction in scope? There is no reduction in scope. There is an increase. Is there a new ROU asset coming up? No. It is a term being increased. So, in that case, what you will do? You will compute the new lease liability and whatever are the changes or whatever is the difference will be adjusted to right of use asset. Okay. Rupees 1 lakh payable at the end of each year from year 7 to year 14. So, what has happened? 6 years have gone by and they are extending it by 4 years. So, what is the new term or balance term? Balance term is equal to 4 plus 4, that is equal to 8 years. Now, at the end of year 6 or at the beginning of year 7, we have a lease liability to be computed for 8 years and the applicable rate is 7%, which is the new rate. So, we will take 1 lakh for 8 years at 7%. But before that, we need to know what was the lease liability on 1st of January or April, whatever you call it, of year 7. At the beginning of year 7, what was the lease liability? For that, we can do it in two ways. One, we can prepare a lease table. So, calculation of lease liability at beginning of year 7. Okay. See, please understand, here I have taken 7.360, in the study material they have taken 7.359. Okay. So, that one decimal change is possible, because of which there will be a slight variation in calculation. Okay. So, how do we calculate that? You can take year, opening balance, interest at the rate of 6%, payment and closing balance. Okay. So, we will take for every period opening balance. What is the opening balance? Interest, payment and closing balance. Now, year 1, what is the opening balance? 7,36,000. Interest at 6%. So, 7,36,000 into 6%. 44,160, 44,160. Payment is 1 lakh. What is the closing balance? So, what you do? You have computed 7,36,000 into 6% plus is equal to minus 1 lakh is equal to, you get 680,160. Then that becomes the opening balance for year 2, 680,160 into 6%, 40,809, 40,809 plus is equal to 720,969. Payment is 1 lakh, and if I do minus 1 lakh, we get 620,969. 620,969. Then year 3, 620,969 into 6%. 37258. 37258 plus is equal to 658,227 minus 1 lakh is equal to 558,227. 558,227. 558,227 into 6%. 33493. So this is year 4. 558,227. 33493. Payment is 1 lakh minus 1 lakh. Sorry. 558,227 plus 33493 is equal to 591720 minus 1 lakh. If I do, I get 491720. In year 5, 491720 becomes the opening balance into 6%. 29503 plus is equal to minus 1 lakh. If I do, I get 421,223. 421,223. And for year 6, 421,223 into 6%, 25273. 25273 plus is equal to minus 1 lakh. Minus 1 lakh if I do, I get 346,496. 346,496. Okay. Now the same thing, if you want to calculate using present value factors, what you can do is see the closing balance at the end of year 6. Okay, this number, this is nothing but present value of 1 lakh at 6% for 4 years, because that represents present value at the end of year 6. So what you can do, 1 divided by 1.06 is equal to 1 time, 2 time, 3 time, 4 time. If you do the grand total, you get 346,510. You get 3.46510. And if you multiply this with 1 lakh, you will get 346,496. Here you will get 346,510. The difference is because of rounding off. Okay. So this is the lease liability balance at the beginning of year 7. Now what has happened is, here the lease has been modified, correct? So what is the lease modification? Lease modification is, in this scenario, term is equal to 8 years, rate is 7% and payment is your 1 lakh. That is the new terms. Okay. So what you have to do, because it falls into the category of lease remeasurement, we will have to compute new lease liability. So lease liability is equal to 1 lakh into present value annuity factor of 7% for 8 years. So 1 divided by 1.07 is equal to once, 2 times, 3 times, 4 times, 5 times, 6 times, 7 times, 8 times, and if I do a grand total, I get 5.971. So it is 1 lakh into 5.971. That is equal to 5,97,100. This is my new liability. Okay. Now what is my old liability? Old liability is 346,496 or 346,510, whatever you have computed. Okay. So if I take 346,496, what is the increase in liability? Increase in liability is equal to 597,100 minus 346,496. 346,496. That is equal to 597,100 minus 346,496, 250,604. 250,604. So what happens? This increase in liability means I have to increase my liability which has a credit balance. So I will say to lease liability 250,604, and the adjustment will happen with right of use asset 250,604. So whatever is the right of use asset balance at the beginning of year 7, to that you will add 250,604. I hope it is clear. Let's now have a look at the next question. Lessee enters into a 10-year lease for 5,000 square meters of office space. The annual lease payments are 50,000 payable at the end of each year. Interest rate cannot be determined and the incremental borrowing rate is 6%. Okay. At the beginning of year 6, lessee and lessor agreed to amend the original lease to reduce the space only to 2,500. Now here, first question, is there a reduction in scope? Yes, there is a reduction in scope. So whenever there is a reduction in scope, what do we need to do? Whenever there is a reduction in scope, we have to reduce the right of use asset and lease liability proportionately. Okay. Of the original space starting from the end of the first quarter of year 6. Now what they are saying that from the end of the first quarter of year 6 is when they are going to do the modification. The annual fixed lease payment from year 6 to year 10 are rupees 30,000 and the incremental borrowing rate is now 5%. Now in this case they have said that they are reducing the space from end of first quarter of year 6, but we don't have quarterly information. Okay. So what we will do, the effective date of modification, what has happened is beginning 1st of let us say January of year 6, from this date itself we will consider the modification. How should the said modification be accounted for? Alright. Now again here, first what do we need to do? First we need to compute what was the lease liability and right of use asset on commencement. And because there is a reduction, when I proportionately reduce the lease liability and right of use asset, what is the impact? Okay, so that is what we have to do. First, lease liability on commencement. How do we get that? That is present value of 50,000 lease payment discounted at 6% for 10 years. That is equal to 50,000 into present value annuity factor considering 6% for 10 years. So 1 divided by 1.06 is equal to 1s, 2, 3, 4, 5, 6, 7, 8, 9, 10. And if I do a grand total, I get 7.36. So 50,000 into 7.36. 7.36 into 50,000, I get 3,68,000. What is this 3,60,000? Lease liability on commencement. When did the modification happen? The modification happened at the end of year 6. So we need the closing balance. We need the closing balance at the end of year 5. Okay. Now for calculating closing balance, how to do it? One, you can prepare the table like we normally do. Second, you can use the present value factor and you can do it. Okay. Now preparation of table we have already done in the previous question and I have also given it in the solution book. Right. You can follow that or you can directly use the present value factor and do it. So closing balance of lease liability. Okay. So one option, as I told you, you take the opening balance 3,60,000, add interest less payment, then the closing balance. This you can do. You will get 2,10,612. This you can do, or you can take present value of remaining lease payment discounted at 6% for how many years? We are modifying it at beginning of year 6, means 5 years have been completed and 5 years are left. So for 5 years what we need to consider. Alright. So present value of remaining lease payment discounted at 6% for 5 years, that is nothing but 50,000 into 5 years, right. So 1 divided by 1.06 is equal to 1s, 2, 3, 4, 5. If I do a grand total, I get 4.2123 or 4.212. That is equal to 50,000 into 4.212. I get 2,10,600. Now this 2,10,600, what does it denote? This 2,10,600 denotes lease liability for 5,000 square feet. Okay, what has happened? It's for 5,000 square feet. Now we are left with only 2,500 square feet. Means half of this liability is no longer there. Because I am giving up 2,500, I am telling to the lessor that you take back 2,500, which means this liability also will be reduced by 50%. My usage area is going down by 50%, liability also should reduce by 50%. So liability for 2500 square feet or square meters is equal to 210600 into 2500 divided by 5000, or you can directly take 50% here, because sometimes it may happen that we may continue with 3000, we may continue with 4000, so that will be an easier way. So if I divide it by 2, I get 1,05,300, and reduction in liability is equal to 1,05,300. Okay. Then we also need to know what is the carrying amount of right of use asset. Now, what is the carrying amount of right of use asset? Our right of use asset would have been 3,68,000. So, carrying amount of right of use asset at beginning of year 6 is equal to 3,68,000 into, see, we have used it for 5 years, 5 more years are left. So, into 5 by 10, that is 368 divided by 2, we get 1,84,000. This is the closing balance. Okay. So, this 5 is remaining. Okay. This 5 is a remaining term. Don't think 5 is completed term. You will make a mistake in the examination. Right. So, we are left with how much? 1,84,000. Out of this, 50% is surrendered or 50% is given up. So, reduction in right of use asset is equal to 1,84,000 divided by 2, 92,000. Now think of it. Liability came down by 1,05,300. So what we will do? We will debit lease liability, debit 1,05,300, because we have to reduce the liability by that amount. Right of use asset has come down by how much? 92,000. So liability came down by 1,05,000, right of use asset came down by 92,000. The difference 1,05,300 minus 92,000, we get 13,300. So that 13,300 we will transfer as gain to the P&L. To P&L 13,300. Okay. So what do? Proportionately reduce. What percentage have we surrendered? To that extent, reduce the lease liability, reduce the right of use asset, and the difference you will take it to P&L 13,300. After that, for the remaining portion, we have to remeasure the lease liability, because the discount rate has changed. The discount rate is now 5%. So what we need to do? Now what we need to do? So first, till here what we have completed? We have completed surrender. Okay. Now whatever is the remaining lease liability, because the terms have been modified, we have to remeasure the lease liability for the portion that we are continuing. So lease liability for 2,500 square meters retained. How many years have we retained it for? We have retained it for, to reduce it to 2,500 and for remaining 5 years. And the new rate is 5%. So present value of $30,000 is the rate. So present value of rupees 30,000 discounted at 5% for 5 years. Okay. So the liability has changed, my payment terms have changed, so because of which I will calculate the new liability, which is equal to 30,000 into, what is the present value factor? 1 divided by 1.05 is equal to once, 2 times, 3 times, 4 times, 5 times, I get 4.329. That is equal to 129,870. 129,870. Okay. Now, if this is 129,870, this is what my new liability. This is my new liability. Earlier, my liability has a closing balance of how much? My liability has a closing balance of 1,05,300. So, increase in liability is equal to, my closing balance should have been 1,05,300. Now it is 129. So 129,870 minus 1,05,300. That is equal to minus 1,05,300. That is equal to 24,570. Now with this my liability has increased. Whenever there is an increase in liability, I will say to lease liability, that is equal to 24,570, and right of use asset debit 24,570. So whenever there is a reduction in scope, what we need to do? First proportionately reduce, then give the impact of remeasurement. So when we reduce proportionately, we reduce the liability by 50%. So 1,05,300 liability we gave up. We reduce the asset by 50%, 92,000 of assets also we gave up. And what is the difference? The difference goes to P&L. Then whatever is the new payment, 30,000 discounted at 5% for 5 years, our new liability comes to 1,29,870. Our original liability recomputed was 1,05,000. The difference will be adjusted to right of use asset and lease liability. There will be some or the other rounding of difference. Okay. So what we need to do in the examination, take the actual present value factors which are given in the question. Alright. Now let's have a look at the next question. Here it is just a change in consideration. Now when there is a change in consideration, is there a reduction in scope? Not necessary. Is there an increase in scope? No, it's only a change in consideration. So if there is a change in consideration and if it is not a reduction in scope, we have to look at the increase side, right? In the increase side, there is no new ROU asset being added. So again, this falls into the category of remeasurement. Alright. So lessee enters into a 10-year lease for 5,000 square meters of office space. At the beginning of year 6, lessee and lessor agree to amend the original lease for the remaining 5 years to reduce the lease payments from 1 lakh per year to 95,000 per year. The interest rate implicit in the lease cannot be readily determined. The incremental borrowing rate is 6%. And at the beginning of year 6, the rate is 7%. How should the modification be accounted for? Again, I am repeating, is there a reduction in scope? Is there a reduction in scope? No. There is no new asset being added, so there is no increase. The term is also not increasing, change in consideration. So this falls into the case of remeasurement. We will simply do a remeasurement, no impact being given to the P&L. So whenever we are doing remeasurement here, we are not giving the impact to the P&L. That is one thing you need to understand, right? Now, 5,000 square feet discounted at what rate? 6% per annum. Just 2 questions back we did the same thing. The present value comes to 7,36,000, right? We have already done this calculation. Then what is the closing balance at the end of year 5? Now closing balance 1 you can compute using this table like we have done, or what we can do, we can calculate present value of 1 lakh discounted at 6% for 5 years. That gives us this 421,225 nearby. Okay. So 1 divided by 1.06 is equal to 0.9433 first year, second year, third year, fourth year, fifth year, and if I do a grand total, I get 1 lakh into 4.2123. So if I multiply this by 1 lakh, I get 421,236. Here it is 421,225. That is because of rounding of differences. Okay. Now in the examinations, what is to be done? See, normally you prepare a table. If you are running short of time, then you can use this to calculate it. Okay. Otherwise, what I would suggest, you always use the table format as far as the lease schedule is concerned, and this lease schedule will also have marks in the examination. Okay. You can compute it both ways, but for examination purpose, you know how to compute using this table, opening balance, interest, payment, closing balance. Do it that way, and also this will ensure that there are no rounding of differences. Okay. So 4,21,225 or 4,21,230. What is that? Closing balance of lease liability. How to do it? By preparing this table in the examination. Okay. Now this is what? This gives us the closing balance at the end of year 5. After this date, the rentals have been changed. From year 6 onwards, rental has been changed. Now, what is the new rent? New rent is 95,000. New rent is 95,000. And 95,000, if you discount it using the new rate of 7%. New rate is what? 7%. So, 95,000 discounted considering 7% to get to the new lease liability. So, what is the new lease liability? Present value of lease liability modified. Okay. How do you calculate that? That is new rate 95,000 is the new interest rate, new lease payment multiplied by present value annuity factor considering 7% for 5 years. Only this consideration has changed. So 1 divided by 1.07 is equal to 1 divided by 1.07 is equal to 1, 2, 3, 4, 5. If I do a total, I get 4.100. So 95,000 into 4.100, this is equal to 1 is equal to 389,500. Now, how to interpret this? See, our current liability is 421,225. Okay, 421,225. And our new liability is 389,500. Means there is a reduction in liability. Why did it reduce? One, the discount factor increased. Second, the lease payment itself reduced. So, what is the reduction in liability? Reduction is equal to 4,21,225 minus 3,89,500. This is equal to 421,225. This is equal to 31725. Now, this reduction in liability is a remeasurement. So, we will reduce the liability, means we will debit liability. Credit what? Credit right of use asset. No impact to P&L. So, we will pass this accounting entry and we will do the necessary adjustments. Alright. Now, this is where you have to pay extra focus in the next question, where we have two things happening at the same time, increase in scope also, reduction in term also. Both of these are happening at the same time. So, let us see how to handle this question. Lessee enters into a 10-year lease for 2,000 square meters of office space. The annual lease payments are 1 lakh payable at the end of each year. Interest rate is not known. Lessee's incremental borrowing rate is 6%. So, now by now you know how to calculate the present value. Same thing is being repeated. 1 lakh discounted at 6%. Earlier also we have done. We will get 7,36,000. This is my right of use asset and lease liability. This all of you should be able to do. You can pause the video and do the calculations and we can continue. Okay. Then at the beginning of year 6 means 5 years have passed by. 5 years have passed by. Lessee and lessor agree to amend the original lease to include an additional 1,500 square meter of space in the same building starting from beginning of year 6. So, we are adding. So, this comes in the category of modification where a new right of use asset is being added. And reduce the lease term from 10 years to 8 years. Achha. So, 10 years now is going down to become 8 years. At the end of how many years? At the end of 5 years, because beginning year 6. So, at the end of 5 years, we have completed 5 years, we will bring down the term to how many years? We will bring down the term to 8 years, means balance term is equal to 3 years only. The annual fixed payment for the 3,500 square meters is 1,50,000 payable at the end of each year from year 6 to year 8. So, we are paying how much? Now, 1,50,000. So, 2,000 became 3,500. 2,000 became 3,500 and lease rental became 1 lakh to 1,50,000. Is this commensurate? We have to check the question. If nothing is given, you can assume it is not commensurate. Or if you can figure out by looking at the question that, okay, 2,000 became 3,500. So, 3,500 divided by 2,000 if I do, it comes to 1.75. So, 1 lakh should have become 1,75,000. Correct? If 2,000 became 3,500, 1 lakh should have become 1,75,000. So, on the face of it, it appears it is not commensurate. Okay. Lessee's incremental borrowing rate at the beginning of year 6 is 7%. This is for remeasurement purpose. The consideration for the increase in scope of 1,500 square meters of space is not commensurate with the standalone price for that increase adjusted to reflect the circumstances of the contract. Consequently, lessee does not account for the increase that adds the right to use an additional right of use asset 1,500 square meters as a separate lease. So, they themselves are saying it is not commensurate. So, two things are happening. So, whenever two adjustments are given, first what you do is existing contract, whatever modification has happened, right, existing contract, whatever changes have happened, first execute that and then bring this new right of use asset. What I mean is, we have 10 years term, now 10 is becoming 8, that is already with us, already in the books. That 10 year first make it 8 years. Okay. After that, you add this additional 1,500 square meters, which is not a separate lease. So, basically what is happening here is one, reduction in term. What is happening? Reduction in term. Now, whenever there is a reduction in term, what do? We do a proportionate reduction. And difference goes to P&L. That is the first thing. After that, what we need to do? We need to remeasure. Remeasure what? Remeasure the impact of change in term. So, one is bring down the term to remaining 3 years, then use the new rate to get the new liability. That is the first round of remeasurement. After that, what we need to do? Second thing is there is a new additional right of use asset which is not a separate lease. Now, when it is not a separate lease, here also what we need to do? We need to do a remeasurement and there will be no impact in P&L. So, first give the reduction, proportionate reduction impact, difference to P&L, then first remeasurement, second remeasurement. Both of these remeasurement you can do it together or you can do separately. Okay. So, ICAI has done separately, you can follow that separate thing also, or you can do it together also. Okay. So, first reduction in term. For that, what do we need to know? We need to know balance of lease liability at beginning of year 6. How much is the lease liability at the beginning of year 6? We have already calculated in the previous question, 421,225. Okay. If you want, I can do it again for you, or if you are confident enough, you can skip this part. Year opening balance, interest at the rate of 6%, payment, closing balance. Okay. So, year 1 opening balance 7,36,000. 7,36,000 into 6%, 44160 plus is equal to, and 1 lakh is the payment, minus 1 lakh. 680,160, 680,160. Then second opening balance 680,160 into 6%, 40,809.6. So, 40,809.6, or you can take it as 40,810 rounded off. 40,810 plus is equal to minus 1 lakh. 680,160 plus 40,810 minus 1 lakh. You get 620,970. 620,970. This is 1 lakh. Second year, third year, fourth year, and fifth year. Okay. Year 3 opening balance 620,970 into 6%, 37258. 37258 plus is equal to minus 0.2 minus 1 lakh. 558,228. 558,228. Fourth year 558,228 into 6%, 33493.6. 33494 minus 1 lakh. 66506. Oops. 558,228 plus 33494 minus 1 lakh. 491,722. 491,722. In the fifth year, 491,722 into 6%, 29503. 29503 plus is equal to minus 1 lakh, 421,225. What is this? This is the closing balance. This is the closing balance at the end of year 5. Okay. Now, what does this represent? This represents liability for 5 years. What do we need? We need liability for remaining 3 years. We need liability for remaining 3 years. This represents liability for remaining 5 years. Now, when we have to compute liability for remaining 3 years, don't do this into 3 divided by 5. Okay, for liability we need present value of, how much is the liability? Well, lease payment 1 lakh discounted at 6% for 3 years. So, basically what we are saying, how much would be the liability if we just have 1 lakh payment for the remaining 3 years. So, that is equal to 1 lakh into present value annuity factor for 6% over 3 years. So 1 divided by 1.06 is equal to 1, 2, 3, the total is 2.673. So that is 1 lakh into 2.673, that is 2,67,300. Okay. Sir, why are we not taking 7%? See, right now we are seeing for our existing contract, what will be the liability if we cut it short by 3 years? Okay, let's cut it short by 2 years. If we continue only for remaining 3 years, this will be the liability based on original calculation. Okay, this is what? This is our actual liability. So, what is the reduction in liability? Reduction in liability is equal to 421,225 minus 267,300. 421,225 minus 267,300, we get 153,925. 153,925. This is the reduction in liability. Okay. Then we also need to see what is the reduction in ROU asset. Correct. So for that, what do we need first? Closing balance of ROU asset at end of year 5. How much will that be? So our total ROU asset is 7,36,000. 7,36,000. We have amortized it for 5 years. 5 years are remaining. So this is for 10 years, and how many are remaining? 5 years are remaining. Please remember, this is remaining term, not the completed term. Okay. So 736 divided by 2, we get 3,68,000. Now this 3,68,000 is for 5-year period. We are saying we will give up 2 years and we will only keep it for 3 years. So what is the ROU asset for 3 years? 368 is for 5 years into 3 if I do. So 368 divided by 5 into 3, I get 2,20,800. Okay. Directly also we could have done 736 divided by 10 into 3, we get 2,20,800. Okay. This is the right of use asset for 3 years. This is the right of use asset for 5 years. What is the reduction? Reduction is equal to 3,68,000 minus 2,20,800, that is 368,000 minus 220,800, 147,200. So we will credit this to right of use asset and we will debit this to lease liability. We will debit this to lease liability. Okay. So lease liability debit. Lease liability debit by how much? 153,925. 153,925 and credit ROU asset. How much? 147,200. Difference minus 153,925, 6,725 will be recognized in P&L. So the gain that will be recognized in P&L is 6,725. After that, what we have to do? We have to remeasure the lease liability for the existing component, and also there is an increase in ROU asset which also has to be remeasured. So both this remeasurement we can combine and identify what should be the change in the lease liability. Okay. So remeasurement of lease liability. Payment is how much? Payment is equal to 1,50,000. Applicable rate is equal to 7%. 7% only they gave, no? Applicable rate is 7% and term is equal to 3 years. So what is the present value annuity factor? 1 divided by 1.07, 1 time, 2 time, 3 time, grand total 2.624. 2.624. So present value is equal to 1,50,000 into 2.624, that is 1,50,000 into 2.624, we get 393,600. 3,93,600. Now this 3,93,600 is the new liability. Our current closing liability is 267,300. Okay. So, increase is equal to 393,600, our new liability, this is the new liability, minus earlier we had reduced our liability to 267,300 minus 267,300, that is 126,300. This we will debit it to right of use asset, 126,300, to lease liability, 126,300. So finally what happened? Our closing balance of lease liability was 421,225. Then we reduced it by 153,925 to bring the balance to 267,300. Then we increased that further by 126,300 to bring it to 3,93,600. And this right of use asset increase, whatever we have increased, plus the original right of use asset, will amortize it over a 3-year period. Okay, this is how we can do it. Now, what ICAI has done is, they have split the accounting. Now, what ICAI has done is, they have taken first remeasurement for existing space. Okay. Now, how do we get to this remeasurement for existing space? Existing space is 1 lakh rental into present value annuity factor for 7% for 3 years. 7% for 3 years we have computed 2.624. So, 1 lakh into 2.624 is equal to 2,62,400. Okay. Now, if this is 2,62,400 and our current liability, means the revised liability here that we have calculated, is 267,300. Okay. 267,300 is the liability that we have calculated. 267,300, present value at 6%. So, reduction is how much? Reduction is 267,300 minus 262,400, reduction is 4,900. Okay. So, this reduction, what we have to do? We have to debit lease liability 4,900 and we have to credit right of use asset 4,900. This is the first step. Then what we have to do? This 262,400 we have to compare with our new liability 393,600. So, remeasurement due to additional space, correct. So, what is that amount? Amount we already know, right? To 393,600. So, increase is equal to 393,600 minus how much? 262,400. 262,400. So, the difference is 393,600 minus 262,400, we get 1,31,200. What is the entry you will pass for this? You will debit right of use asset 131,200, credit lease liability 131,200. So, if you see the net impact, 131,200 minus 4,900 minus 4,900, the impact is 126,300, the same impact that we had given here. Okay. So, that is how it has happened. So, here what all things have happened? One, reduction in term by 2 years. This you will do proportionate reduction and difference in P&L. When we say proportionate reduction, please understand, right of use asset will do a proportionate reduction, but the other thing, that is your aspect related to lease liability, you will do a recomputation. So, ROU asset you will do a proportionate reduction, lease liability you will recompute. You will recompute, difference goes to P&L. Then after that you will do a remeasurement using new rate. And whatever is the impact of the remeasurement, that will be given to the right of use asset. I hope it is clear now. You need to practice this. These are important questions, though they have not tested frequently, but whenever it comes, it can be a highly scoring question in the examination.